Every fiat currency system in recorded history has eventually collapsed under the weight of its own contradictions, typically lasting 30 to 40 years before structural failures to force monetary reset. The current dollar-based system, established when Nixon closed the gold window in 1971, is now operating in its sixth decade, well beyond the historical average for monetary stability. Central banks are recognizing that we're approaching what engineers call the structural failure point, the moment when confidence breaks rather than bends. Unlike gradual devaluation that markets can adjust to over time, confidence failures in monetary systems tend to cascade rapidly once critical thresholds are breached. The institutions moving gold reserves understand that mathematical realities don't respect political preferences or convenient timing. When structural limits are reached, adjustment becomes inevitable, regardless of whether policymakers or markets are prepared for the transition. Yet skeptics argue gold belongs in museums, not modern markets. They're about to discover how profoundly wrong they are, because cutting-edge technology is solving every historical problem that made gold-based systems impractical for international commerce. Picture a transaction unfolding between Moscow and Mumbai that demonstrates how dramatically the technological landscape has changed. A Russian energy company needs to pay an Indian manufacturer for specialized equipment. Rather than routing payment through correspondent banks that could take days and face potential sanctions, the transaction flows through a completely different infrastructure. The payment begins with blockchain verification systems that track gold ownership in real time across international borders with satellite precision. Smart contracts automatically execute currency conversions based on precious metal spot prices verified simultaneously by multiple global sources. What once required weeks of banking coordination now completes in minutes, with cryptographic security that makes traditional wire transfers look primitive by comparison. Central bank digital currencies are being programmed with automatic commodity backing algorithms that adjust in milliseconds rather than the manual processes that made previous gold standards cumbersome.
Welcome to What's Left, a weekly political discussion challenging the mainstream left. I'm Eduardo Barca with co-host, teacher and socialist Andy Lipson and socialist Kenny Cepeda. We're online at whatstthepodcast.com. You can find that link to our site in the episode notes. You can also find my personal social media handle as @Don Eduardo Barca. Please subscribe, rate, review, turn on your notifications, and share your favorite episode wherever you found this episode. We have merch as well. If you fancy a shirt, contact us to our site at whatstthepodcast.com. Andy will always get back to you, who runs our site. Thank you, Andy, always for doing that. Credits. Where I do. All right. Kenny has introduced a topic for us that I will put out, a topic that I just like abhorrent. I don't want it. So what is this topic? I don't think, and I'll give my response to it, but one of you can please share us what the topic is.
So I sent you guys a video about why gold is making a comeback. Gold has been on a wild ride. Like prices have just like. Can I show you a graph actually?
Yeah.
All right. So this graph shows the price of gold. Since you can expand it to like the last max. You see how it says 10-year? Can you expand it to like max?
Oh, right. Like all
30. All data. Yeah. All right. So first, let me tell you a story of why I got here. I've been concerned over, inflation, over the price of things, over the money that my mom, who is retiring, has saved. That's the real reason why I looked at it, because if your money is sitting in the bank, it's losing value. So, basically, like if you had let's say $100,000, in like inflation is 25% over the last 5 years or so, your $100,000 only buys $75,000, and so on and so on. And so I'm concerned for my mom. She doesn't have a lot of savings, and so I've been watching the Kim Iversons, the Mel K's, the George Napolitanos, the Jimmy Dores, and they're all pushing gold. And then I also started listening to like financial advisors, and sometimes I watch this channel called Kitco News, and then I started backtracking because I've heard some conversations um, where Lynette Sang and other people like talk about what's happening with the currency. It never hit. So the point is that I got to this graph, and I started trying to make sense, of what's been happening, right? Like, and if you see the graph, it's pretty much been steady since we left the gold standard in 1971. So the price of gold like has maintained, but around 2008,
Yeah.
that's when gold just started shooting up, and it just coincides too with the central banks starting to buy more gold, and so the point is that I started with my mother, but I realized that there's something way bigger here. Gold is generally seen as a safe asset. It's not really considered. It hasn't been considered um, a high profit asset per se. So it's like a last resort type of thing. Let's look at this graph. So again, the price this year alone has gone up like by 50%, which is insane. It outperforms any other assets, like any other types of investments. And so uh, in the it's gotten to the point where investors are advising people to change the ratios, of how they diversify their portfolios. So you invest in treasuries, which are government, backed assets. You invest in gold. You invest in shares. A bunch of things. And so they're advising now to put more money in gold because again, the trust in the dollar is just fucking decreasing. And if you see, again, this graph is kind of indicates that, right? Like that there is a steady increase in the price of gold because there is more demand. But then again, I started looking and I asked myself, how do you invest in gold? And then so again, I have zero experience. I'm in the process of learning, and it's taking me so many rabbit holes that are important because you got to understand history and what the gold standard is. And in the first video that I sent you, there is almost like a positive like spin about where we're heading with technology and the potential of gold. Us going back to some gold standard where because and that's a very libertarian argument that like the Federal Reserve and abandoning the gold standard it's a mistake. Not everyone argues that, but that when we abandoned the gold standard we got into all sorts of trouble. But then again in diving into these rabbit holes, I've learned that it looks like they knew from the beginning that the gold standard was not going to work. Like there were people saying that the money supply were going to strip the gold standard. Because essentially the gold standard was that $1 gave you so much gold, but again when you're uh, borrowing money, like the government needs to do things right, like going to
Kenny,
war.
should I still be on this graph?
Yeah, for now. I mean, you
Okay.
can eliminate it.
All right.
So that's just kind of like the initial reason that I wanted to talk about this, because I have some videos right like there where there's some shady stuff going in there, and what I've also noticed is that again gold has a history of staying relatively at the same price because most people only go to it if like some shit is gonna hit the fan. But they didn't even do it in 2001, right when 9/11 happened. They didn't even do it during the Cold War. The
Hold on.
price
They didn't do what?
people move to gold in the way
Yeah.
that they're doing now, right? In the way the price of gold hasn't moved in this way. It's just unprecedented.
Yeah.
And again, that's it. Gold is seen as a last resort store of value, right? But and it's sold as this democratic process, right? Where you can just buy gold. And again, it turns out that in my research on how do you invest in gold, I realized that it's not as straightforward as just go buy gold. You can also invest in some paper gold essentially, which is the dominant way the U.S. does investment. That's what they call an ETF, exchange trade fund. You're gonna see that a lot versus physical gold, and there's a massive difference in holding gold versus investing in some paper product. And again, but you have people getting pushed towards gold in the channels that I listen to for geopolitical and like social analysis of events. And so I just think there's something interesting there. I'm going to pause here to see if you have any comments.
Well, first, I think because Kenny entered right into the share and we didn't actually give a topic for the episode. Andy, do you want to give one?
Well,
At the beginning, we didn't say.
What I would say is we're going to be talking about gold and economics, and I will back it up a little bit this much to say, first ask the question, who are we to talk about gold and economics? Kenny, are you an economist?
I am not.
Eduardo, are you an economist?
No.
Well, I have a PhD, so maybe that makes me more likely to be qualified to talk about this.
What did
But
you
even
study,
my
though?
PhD is in biophysics and in X-ray crystallography. So
good luck with that.
Exactly. So let's first establish that none of us, and I think this, Eduardo, is what that opening round you had, and Kenny, I definitely want to get back to some of your stuff, but I feel like there's a starting conversation we need to have that gets back to Eduardo's this on having this discussion. And actually, Eduardo, it's been a kind of a somewhat debate point between you and I of how much we need to be experts to discuss things in general. And we are now in an area that I think all of us equally feel unqualified in any way to say, oh, I know this or I know that, or here I can tell you this and I can tell you that. But I think what Kenny is doing is basically saying, fuck it. We got to get started somewhere. And I actually really agree with that. And so what you're going to hear today are people who we have been like, obviously I talked with Fabio Vigi about gold a little bit. Not the same question you just had, but it's actually a related question. Like, how do you invest in gold is related to what's happening to gold. And then it's related, in my opinion, to what's happening to to value in general. I think it is okay for people to bounce all over the place as they explore. This is what we're asking of people in terms of revolutionary practice, which is you're going to have to learn on your own. Because the experts are not the experts, for that word, are only going to tell you the things that help them. They will tell you the truth that helps them, and they will shape the truth into a lie when it helps them. So to find out what actually helps us, which is what you're framing it around, like my mom and our future and our finances, you can't get those answers from experts. So then you have to learn. And I think that's what you're trying to do. You're trying to basically burst that bubble and say, I don't know any of this stuff, but I've been kind of paying attention, but I'm going to draw Andy and Eduardo into my world so we can do this. And I agree with that. So Eduardo, I want to see what you have to say about the discussion behind the discussion first. Because I'm putting words into your mouth when I say, like, this is why I think Eduardo is kind of like saying, let's not do this.
I think sometimes we need more prep time, and this was given to us by Kenny over the week, so I just needed more time, and I'm all right tackling tough questions or exploring topics that I may not be familiar with, but I just need more prep time. It's fine, and I like the premise, how we're entering this, and it makes me feel comfortable for anyone for everyone just to also be open-minded to enter a discussion that may not always result as concrete, or how do you say it? As enter a discussion that may not be as, I hope you edit this part, my pauses, Andy.
Yeah.
Might not be as conclusive, might not be as conclusive and set out that you know everything. So now I go ahead.
And again, this to me feels like what we did during the COVID period, right? Like, and why people were being chastised, right? Like that, like, don't do your own research, right? Trust the experts. And again, this is a very big part, right? This is why I appreciated Fabio bringing into the understanding of the COVID period, the more economic angle, right? Because we were lacking that. And I just feel that, this will be central because it is capitalism, to what's coming. And so I think we have to have at least some introduction to learn some basics, and together, because I don't have all the answers or all the questions, like I said earlier. And that's what I'm hoping, that, together we can crystallize some things, or at the very least get something going, because, otherwise we won't understand much.
Right.
Yeah.
So I guess I'll be looking at my notes because I have some notes, the way that I'll guide my thoughts and the way that I'll trying to understand this for folks that want to be part of this side where you're just trying to lay out what you do know instead of your opinion of what might be of all this mess, because that's the way I sort out my thoughts. Just like, this is what I know, this is what I know, this is what I know, and this is what I don't know. And I don't really have an opinion. So I do know that the central bank demand is very strong. I was looking at several links, and I'm seeing that, yes, many central banks, especially in emerging markets, are buying a lot of gold to diversify their reserves. That's what I do know. There is, as you're saying with that graph, there is rising. So central bank is buying inelastic. It matters because central bank is inelastic. Even moderate buying from them can meaningfully tighten supply relative to demand. So
Wait,
these are the things.
That was too fast. Can you say it again?
That this matters a lot because central bank buying is inelastic, and I see, like Goldman Sachs, they are accumulating gold, but this also means, and this is what I was looking at, that China is accumulating gold as well. China is also vaulting gold, and they are also trying to back their yuan. I think it's yen.
Yuan. Yep.
Their yuan by gold. The way I'm seeing it from being here in Latin America is how Latin American countries are shifting their political alliances, and they're seeing how, with all the geopolitical forces of what could happen, the geopolitical risk, the uncertainty, gold is a safe asset. And in order for these bigger powers like Russia or China, and if we saw back in May, China did tell the rest of the BRICS to start using the yuan to be able to use that more than the dollar, and that's why I think Trump invested heavily with, I think, $40 billion into Argentina, because Argentina was being persuaded by China or being more aligned with China, and that's what the USA wanted to do, try to corral back the Latin American countries. I think that's what's happening. Here I am making conclusions when I said I wouldn't. So it's not so much of a charity, rather than more of like trying to keep a stronghold in Latin America. And China is using gold as a way to back its currency, whereas USA is backing its currency with treasuries. So I think that that's how I'm seeing the importance of how gold is being a safe asset to be able to draw in countries to trust them. As we have also seen that if you invest, or you have your what do you call it, your reserves in a central bank that's outside of your country, and you're sanctioned or it's frozen, such as Russia that's had that, Venezuela has also had that, then it's not really safe. And so the assets that most safe is keeping gold as the dollar weakens. These are little things that I'm trying to sort out. So I've been listening to what you shared, Kenny, and then also trying to write down what I see, how it's connected to what's happening today. Because, I mean, what does it mean that gold is being bought and accumulated, and the price of gold is rising. I don't know what that means in the real world, but this is how I'm seeing how it plays out in the real world. I think
So,
that's the way I see it.
can I maybe take a stab at trying to answer that question?
Yeah.
So the way that I understand is that there is lower trust in the US dollar, right? There's lower trust in the US treasuries, right? As a long-term investment. Generally, central banks will hold this, right, reserves in order to defend their own currency. Like if they have to buy back their own currency, because if there's too much money, right, in the market, then the value of the currency lowers, right? And then if you're getting into debt like we are, right? Like right now, the US is like at $38 trillion in public debt, right? And this is something Fabio has alluded to, that uh, just the interest itself is becoming unserviceable, meaning repayable, payable back. So how the fuck are we gonna pay this back, right? Like $38 trillion. I saw something where I think the French and like the French and I think let's just go with the French. They finished paying the World War I debt in like 2008, 2010,
Yeah.
right? And so in other countries did too. So again, and that was billions. That was not trillions of dollars. I talked to my partner, and like she's like, "What does trillions of dollars even mean?" It's even hard to conceptualize. Like how much money. It's hard to conceptualize $1 billion, yet alone $1 trillion, and yet there is no attempt to reduce that, right? Like Trump came into the presidency, the second term, and people thought that he was gonna, decrease war, right? Because I think a lot of people realize that connection of war and spending, um, and bring fiscal control, into this spending. But no, it's just shooting up. They increased the budget of the Pentagon, for example, right? Like to close to $1 trillion. Again, that's an insane amount of money, and so the signal there is that there is no commitment to bring under control the value of the dollar. On the contrary, again, the charts that I'm telling you, what the gold price is supposed to be saying, right? Like that, people and institutions are losing trust in the dollar, so they're going back to an old storage of value, which is gold. Um, and actually, like so there is like a ratio of like how much uh, institutions, whether it be a central bank or like commercial banks, hold in terms of U.S. treasuries versus gold and other reserves. And so gold is surpassing that. It's been the global banking system and the institutions have held U.S. treasuries for a long time, because you know what? They're a sure bet. They're going to pay us back. It's going to mature. But now, yes, they're going to pay us back, but with dollar that is worth less. So fuck that. We're going to store it in gold. And again, gold is not, it's actually being scoffed at. Lynette Sang talks about Jamie Dimon just talking shit about gold in the past, and Bitcoin, by the way. And now it's like, no, like invest in gold type of thing. But again, this is where I want to later, maybe we'll get into it, that there's some shady stuff happening in the markets of gold and silver. But again, that is the general idea, that why gold is appreciating, right? And people who are in the know of finance, I guess, understand that the dollar is fucked, and there is no political commitment, right, to that. They're like, fuck it, and like just keep spending, and like basically run the credit card. And so then it brings up the question, what's next, right? Like how are we going to transition? And also gold plays a role in there, but I'll pause there.
There's a lot of things actually just in the beginning here so I wrote down a few things like trust, war, and you said war and spending, and I wrote down war and debt, gold and value. These are big terms, I actually think. So let me try to address Eduardo's question as well about gold and its rising value. Gold's value isn't right. I don't think gold's value is rising. What it's showing is the falling value of the dollar, because the gold's value is, I think, pretty much staying the same. Although I think it's related to the actual labor that is used to mine it and extract it. That's what gives its value, and I'll come back to that because that. So And maybe, you could even say that if it took less time to do that, its value would decrease. But necessary labor time, which I'll get into that later. But what you're really seeing is not so much the change of the value of gold. You're seeing the decline in the value of the dollar because it's taking more dollars to get the equivalent amount of gold. So that graph going up is just showing the value of your dollar shrinking. And this is what you're worried about, Kenny, because that's the thing that turns $100,000 into $25,000 or $50,000 in a year. And that could be something that, and if you look at that 10-year trajectory, you're talking about $100,000 that's now worth $10,000, something on that order. And that's very worrisome for anybody who's all their value or all the things that they have that they consider something that's in their savings are in the form of dollar. And like you said, when people talk about investing in gold, well, you can get treasure, you can get notes, and that bank is holding that gold, or you can hold the physical gold. And the physical gold, if you had physical gold in your possession, and someone doesn't have a gun to just take it from you, and that we're going to get to war later, then conceivably you have something in your hand that, regardless of what happens to that dollar, it retains its value. So it's dollar insensitive. And this is what capital is. Capital is not dollars. Capital is accumulated value. And this is why having a home is different. Having a home worth $100,000 is different than having $100,000, because when the value of the dollar goes down, that home goes up to $200,000, but your dollars stay at $100,000. And so this is why the capitalists are getting rich off of inflation, is because capitalists don't own dollars, they own capital. And capital's value doesn't change in relationship to currency per se. And so when they're raising interest rates, and this is where I'll get off this. When they do things that raise inflation and makes our life more difficult, that they are not feeling the pain. They are pushing the pain of whatever of whatever financial outcome they're wanting onto us. And that's what's happening when they do things to raise inflation. So everyone thinks about the COVID period, when they were getting the little money from the government, thinking, oh, they're doing us a favor. And they were literally loading our backs up with more austerity as they shoved money up to the top, and also built in the system that would jack up inflation. They were literally lowering the dollars we would get paid for our work, and the value of that dollar. So everyone thought we were getting done a favor. They were screwing us then, and we are seeing now the interest of being screwed is now being arrived at. I guess I don't want to talk about war and debt yet, because the really interesting thing that came out of the videos you sent, because that one video that you sent that talked about gold was talking about how, like, hey, look, there's the economy has gone off of gold since 1970. And that when we say the global economy, that's because the US ran the global economy. You can say the Soviet Union carved out a space, but they were always dealing in relationship to the empire of the US. So even in the bipolar world of Soviet Union, United States, the US hegemony was still dominant, and then became super dominant after 1991, when the Soviet Union collapsed. But basically, the gold standard and the U.S. economy, that was the value of the dollar that was connected to the amount of gold you had, that was disassociated in 1971. That video you sent said the reason they did that is they didn't have the technology to track gold. That's completely false. Like, that's false. And that it was related to what was happening under capitalism, which was the growing debt for the U.S., the loss of the war in Vietnam, basically meant they in order to really actually continue to pay for things for themselves and to expand their empire, they were going to have to unleash their gold, their dollar production connected to any physical value. And this is that thing that Fabio was saying, is like this financialization problem, where you create increasingly more of the fictional economy. And I don't know if he marks that as starting in 1971. I wouldn't start it marking 1971. It certainly goes back earlier, and different times where and I would say you could even go back as to the pressures that led to World War I, to say that same process created a debt pressure, which forced everyone to basically try to become debt collectors using their armies and then there was one power outside of the war that was financing all the stuff. And then in order to make sure that they could collect on that final debt, had to come in and make sure that the war ended on terms good for the Allies. And that was the United States. JP Morgan, basically said, look, we've extracted all the wealth from Britain and France and Russia by virtue of funding their war. But if they lose that war, then we're bust. So we have to now make sure that they win that war, and they will be our vassals essentially. And that set the stage for the Versailles Treaty, where reparations was going to be used. Like the defeated power was going to have their economy collapsed, so that the rest of them could be successful in either debt repayment that they had to do, or being able to finally collect their debt, which is what the United States had to do. So I think war and debt are very much connected, and that I believe that's what we're seeing today. Like we are seeing the U.S. has debt, Russia has debt, less debt, but debt. China has debt, and all of them are going to. I mean, what I believe we're seeing, and this is kind of what's laid out in that thing of like, well, now we're going to go back to a gold-based economy. I think that's true in the case of China and BRICS. It looks like they are going to establish a fiat currency. It's not a digital currency that has a physical backing in gold. And the U.S. currency, as far as I can tell, is going to continue to be backed by the trust that people have that the U.S. empire is the hegemonic empire. And that is the thing, like that is why the U.S. can't lose Ukraine, can't lose in the Middle East. Like ever since it's been a fiat currency, the value of its currency has been on the willingness of everyone to accept that U.S. is a debtor nation, but the U.S. can't collapse because everyone else collapses after that, since everyone's treasuries hold dollars, not something else. And so the U.S. after World War I and really after World War II became too big to fail, so that it cannot, not only can it internally it not afford to go down, but no one else can afford to have the U.S. economy collapse, because everyone else holds currency in dollars. And I'll show one final thing that I found that I thought was a useful thing to show what the direction is. And Kenny, I did get your central bank gold reserve, so whenever we're ready to talk about that, we can. So let me share this one little chart that I saw. Share of foreign exchange reserves in U.S. dollars, right? In 2001, most foreign exchange reserves was 72% were held in U.S. in dollars, and now it's down to down to about 58%. Like again, I always look to see, when I see graphs like this, I always look to see where the zero is. So yes, this is a big decline, but we're going from 72% to 57%, 58%. So they are trying, this graph is trying to exaggerate the decline by starting here at 54%. And so people, I just don't like that kind of stuff, but it is going down. And in terms of what Eduardo was saying, let's see, oh yeah. This is China buying gold since 2022. And how much gold it's holding in its reserves, at least that it's claimed. And you can see it took a giant leap in 2023, or maybe 2024. Some people put that up to the fact that like when basically $300 billion was stolen from Russia over the war in 2022, which basically meant that your holding reserves in anybody else's bank is not a good idea, because they'll just freeze it. That was talked about in the video that happened to Venezuela, and it was only $1 billion. It's many tons of gold, but it was only $1.8 billion. But it basically established that the West was willing to freeze somebody's assets, and we're not stealing your gold, we're freezing. You don't have access to the gold that you put into our bank. And those are the sorts of warlike things that countries will do to one another. So So I think there is a war. Like I would say that the drums of war are beating are more obvious again, and I do think we are moving towards two different economic systems. We have had one economic system which has had the U.S. dollar underwriting all investments and things like that. I think China is trying to move to a place where it controls enough of the globe and can guarantee to the people who are being part of that we're not going to keep that gold for ourselves. It's not just going to be held in China. It's going to be kind of diversified through the Shanghai Gold Exchange and mechanisms that it has to show that we won't do what the United States is doing and freeze it and hold it when it serves our interests. But I think what they're trying to do through their collection of gold is create a different digital currency that is backed by something beyond trust. It has a physical value to it, and that's different than trust. Now, the trust the United States holds is also built with all those military bases all across the globe, with all its infrastructure and manufacturing infrastructure, and its network of institutions that it has across the globe that say we exist and we have power. But as that starts to decline, when the U.S. empire starts to decline in real terms, as it has in Ukraine, that has an economic implication for a debtor nation like the United States, who will only be too big to fail until it is no longer the biggest thing on the block. And then people are like, you can go ahead and fail. And then when that happens, it's over.
May I add that to me? So again, that was the part of the end of the video, right? This almost optimistic view that technology and gold can bring us back to more sound capitalism,
Yeah.
and that's what the BRICS in China is selling, right? That, but again, like when I started looking at the history of gold and the gold standard, it's not new to the U.S. The British did it too, and they also outstrip money supply, and they run into problems. That's the bottom line. That gold in itself is not a solution to the capitalist issues. You know what I mean? So, so yes, there is a trust projected, right? Like that's what it boils down to me. Like this conversation that they're trying to sell us that gold will make capitalism be more efficient and solve a lot of the problems the capitalism has, right? That's what libertarians would argue, that like they tend to be like, oh, the gold standard, leaving the gold standard was a mistake because now we can just print money, and they were printing money before that we even did the Bretton Woods, because they had to pay for shit like war, but and then that's how I see the going into the Bretton Woods system was also a symbolic thing, that they knew they were going to outstrip the money supply eventually and run into the problems that we're running right now. So what I'm saying is like China and BRICS, they're going to run into a problem too. They're just trying to get their share of the world, because I do see, I don't know how the U.S. is going to solve this, because there is not enough gold in the fucking earth to justify the money supply that the U.S. has just floating around, and they don't give a fuck. So I'm not so clear on what they're going to do, in because even the stablecoin thing is another trust thing. It's still pegged to the fiat currency. Fiat meaning just the dollars printed, that has no backing, right? So there is, stablecoin, to my understanding, establishes a one-to-one parity. So they give you one stablecoin, and this is done through private institutions, right? But it's still linked to the fiat, currency. So it doesn't solve the mathematics that are, played here. But it does, again, I think of it like going to a casino. Like when you play, you enter the ecosystem, right? You give your dollars to the casino, and then the casino gives you credits in their system, and now they control the rules of the game. And so that's what I think ultimately stablecoin is trying to do, so that to get more people. And again, there's a perception that the state, right, the U.S. state is not responsible, right? It's irresponsible, blah blah blah. And so if it's done through private institutions, just like they did censorship, then might be more trusting people, and they're selling this bullshit that is cheaper and faster and blah blah blah. But you're still pegged to this, the fiat system that is in trouble. So I just see, again, I don't fully understand. That's just what I'm seeing right now, that there is a trap, and I still don't know how the US is planning to resolve, the problem, except maybe war.
That's it. That's how okay. Anyway, that's how they will solve the problem. They will have to destroy the infrastructure of their opponent that they're trying to build. It's a physical infrastructure connected through Belt and Road, connections between China and Africa and these places where a lot of these raw materials are extracted from. They will physically destroy and isolate China and their ability to operate as a global hegemon through war.
And that was part of the incentive in World War One, right? To pillage other people to be able to pay fucking for the debt that you incur, you know.
And when the U.S. emerges from that World War III as the global hegemon, that trust is resolidarized. Like that trust is rebuilt. Everyone once again trusts that the U.S. is the global hegemon. There's a mass destruction of infrastructure, out of which a new rebuilding has to be done, and the people who will make money off of the rebuilding is the power that lives out of that war, compared to the ones who lose the war. And as you said, France just paid back in 2010. Germany finally paid back in 2006. One of those kind of crazy things. The loser, or the victor, gets the spoils, and the loser pays the price of the war. And so that's what the U.S. is going to try to impose on China and Russia. And that's what it actually tried to do through Ukraine with Russia, is crack it enough so it could then, like, maybe even make the Russian political system crack enough where it would break down and the U.S. could go in and pillage. And, U.S. investors could go in and pillage and basically claim the resources that they are now trying to claim, and do what they are going to plan on doing in Venezuela to Russia. And they thought they could get away with that, I think, with Ukraine.
And literally that's what they're saying about Ukraine, that Ukraine should get a loan that is backed by what they've been able to take from Russia, right, in Europe, but as long as Russia is paying reparations.
Right. So they're trying to essentially make the victor be they're trying to use that $300 billion thing, is trying to make the winner of that war the loser. They're playing a game. It's not a game of, like, not resources. It's real resources being stolen from a country. But Russia didn't lose that war, so now they're basically ginning up the energy for a larger war. And when that was done, when $300 billion was stolen from Russia, it accelerated the process by which countries that were not sure about the United States would say, we need to get rid of dollar reserve. We need to get rid of the dollar. Like, we can't put as much of our holdings in dollars in foreign countries. We actually have to get it back in real terms back to us. So so this crazy country can't just freeze our assets and just take anything from us whenever they want.
Well, I was just thinking about how there is Kenny mentioned the cryptocurrency, and I was thinking how there was always this agenda to move us into cryptocurrency, which a lot of people think that it just came out of people wanting to decentralize the economic system and trying to get us off the government. But as we're talking and as we've been discussing, I think that there has been a push behind the curtains to get us onto a more centralized system that's not decentralized and into cryptocurrency. But it was tested out first in the private sector before getting into the public sector. And that's what I thought. I think before central bank digital currencies came onto the world, and before being adopted as something that could be used by the government, I think the government was looking at what was happening in the private sector first, and that was the way that they tested, refined the way that cryptocurrencies would work out in their economic sphere. So that's how I just to touch on Kenny's point about cryptocurrency, which I think is related. That's the only thing I have drawn a conclusion to after how many episodes we've done on cryptocurrency, or how much we've been discussing here and there, bits and pieces in our episodes.
I just want to say that, at least through my observation and listening to like really mostly libertarian worldviews of what's happening, uh, is that this notion that the government, right, and private institutions are separate. They remember uh, like what capitalism is, right? Like the bourgeoisie conquering political power, right, and like making the state the agent of itself. So again, remember the Federal Reserve. It's not really. It's a amalgamation. So it's a bunch of banks, right, regional banks that have gotten power through the state to print money. That's the Federal Reserve. It's not a government institution separate, like it was created. It's literally a bunch of banks, that have a stake that are able to print or not print money and influence, the economy, but they're supposed to be managing the economy. So again, there is no separation to me, there is a public facing thing, but you know, th- so yes, this whole Bitcoin thing, right? Like no one knows who the fuck really made it. There is theories and shit, and it just came live. And this is one thing that in one of the videos that I sent you, Lynette Stang talks about. Like, is it just coincidence that Bitcoin came live? In 2009 during the fucking thickest, you know, basically what the graph is showing, right? Like that from 2008, like she calls it the burial of the debt system as we know it. Like that's the beginning of the end, basically. And then just happens that Bitcoin came on live. And she also talks about some white paper, right, that in 1996 where the NSA is talking about programmable currencies and shit. And so again, like this that's why I get annoyed when people talk about that these people are stupid, and also like they don't know it. I also disagree that this I've heard this through our own circle of people that they don't know that they're in trouble, that the capitalists don't know. They fucking know. They're just kicking the can down the road as much as they can, and then the new problems arise. And not maybe not everyone in the system knows, but the big players know. That's what they're planning the cryptocurrency and these massive moves, and the Chinese know that's what they're planning their own shit to grab, and maintain their own or grab their own piece of the pie. So they're thinking ahead. This didn't just happen yesterday. This crisis didn't just happen in 2008 either. They've known the problems, and it's just right now we're accelerating towards a fucking cliff.
Yeah, and the thing that I think when I first heard about cryptocurrency, to come back to Eduardo's statement that I hope will dovetail with what you're saying, Kenny, is when I first heard about cryptocurrency, I feel like I heard about it as a global currency. And I don't think it's going to be a single global currency. I believe there's going to be two cryptocurrencies, two major cryptocurrencies. I think one is going to be backed by the power of the U.S. empire, and through an explicit fiat system and U.S. Treasury connection to dollars. That's going to be the Western cryptocurrency, and then there'll be the other one backed by gold. At least that's how I'm hearing about it. I have some questions about that, but when I was talking to Fabio, he had this notion of like Russia and China in particular, really just collecting all the gold it possibly could to create the possible physical backing for its digital currency. The reason for a digital currency ultimately is the one that this woman Lynette Zhang said, and I think it's also been said by who's that other woman? I know Brandy likes her. Catherine Austin Fitts. Catherine Austin Fitts. Both of them say the same thing. Both of them I agree with fully. Is digital currency is a mechanism of control, and it basically allows you to do to any single worker what the United States has done to Russia. I freeze your assets, I lock them, and I control them, and I tell you whether you can get access to them, because it establishes, with the whole 2030 thing of the World Economic Forum, you will own nothing. So that you really don't own your money. The money exists in a digital place, but the key to that money exists with the Federal Reserve or a bank that controls not just the value of the digital currency, can move it up and down any way it wants, but controls your access to it, as well as knows how you're using it every time, like knows how all dollars are being used. And so the World War One was a war around debt and various countries trying to be their own debt collectors through winning a war and ending their debt problems by expanding their empire, expanding their control of resources, and outsourcing their debt onto the loser. But ultimately, the actual people who paid the price of that debt was the global working class, in either blood or austerity. And that is a truth that people have to understand, is that capitalism forces forces all its sins must be paid by workers, and that's what it's built on. That, and digital currency is a down payment for the various empires. The establishment of digital currency, whether it's an Eastern one or a Western one, is a down payment on the ability to really double down on forcing the austerity of your imperial project onto your own working class, either in the form of austerity or blood. And then, of course, to also impose it onto the working class of your enemy, as well as onto the capitalist class of that enemy, if you really can defeat them and force them to pay you over years and years and years. So that's how I now see the digital currency fight, which is who can establish domination over their own working class and a broader section of the working class internationally, to then turn the extraction of that control into something that allows them to be a more efficient and better war-making machine. And of course, to do the digital data collection that allows them to build the infrastructure of an AI technology that they can use to boost themselves into power even more. So that's how I look at that. Does anybody have a place they want to take this? Because I have a few places to go.
No, go ahead. I'm trying to sort this out in my head.
Yeah. So one thing that was a question to me when I think of my conversation with Fabio, and I think you were going to show something like this, and it's probably the same thing that I was wondering about. So I showed you guys this window, but then, okay, yeah, China's hoarding gold now, all right, and it's trying to make it known. That's another thing. It's not hiding it. So I think it is trying to establish to its allies that, like, we want to be a place of trust where you can trust us because we have something physical of value, not just some made-up value that the U.S. is built on. But then I look at this central bank gold reserves, and I mean, if this is accurate, and I've heard that China's might be more closer to 3,000 metric tons. Look at United States, Germany. I didn't know the IMF has its own thing. I don't see why the U.S. how the IMF can be independent of the United States. I don't believe that. So this 2,814 tons, as far as I'm concerned, that's just U.S. gold. It put in another name. But if you look at the gold of the West, 8,000, 3,000, 2,000, 2,500, 2,500, that's a much more gold than China, Russia, and India combined.
If you put the chart I sent you, it has some more of a visual, like
okay. Let's see. I'll stop this one. So you understand the question I'm getting at, right, Kenny?
Yeah.
Okay, then I'm going to go to your thing. Hold on.
Yeah, up top the colors, the color thing. That gives you a visual, like. You can click on each, and it'll teach you the countries too. If you click on.
Oh, I see. Right. Okay. So is this saying the same thing? It's just showing the amount of gold.
Yeah, exactly.
And so China would be down here in Central Asia, right here, or something, or
East Asia.
South there's South Asia. God damn it.
Up top on the.
Oh, right here. Okay. So yeah, there it is, right there. Like you said, I mean, it's not all East Asia is not all China. It's Japan too, but it's mostly China. And so, can I go off this one?
Yeah.
So what do you make of that? Like that to me, that doesn't look like a very good strategy for making your currency. Like I feel like I'll go back to what I remember saying before. Currency devaluations don't occur without a world war. Like I don't think we can get there. I don't think China can get where it's trying to get to defeat the dollar, not just on their terms, but on gold terms. When the US and the West hold vastly more gold reserves than China does. So that strategy can't work. That's what I would say.
That's exactly my point. Just like, again, that's what I noticed, even in this price of gold stuff, that the big players get to influence the prices and manipulate it as however they fucking can. This happens in shares and everything. And so, yes, the West, the US, they all have the biggest gold reserves. Again, if these things are accurate. And again, remember, gold is not like it's a hard thing to get. It's like you said, Eduardo, it's inelastic. You just can't just produce it. I heard something like you can fill like 3 Olympic-sized swimming pools with all the gold in the world. And to me, it looks like the U.S. has 2 swimming pools versus 1. And so, again, what is the play here? Like, is China just like conceding to like a smaller share of the world? Like, and think that they can survive? And at the same time, because of these massive reserves of gold in the West, it makes me wonder: is there also going to be a play on with gold on the West? And again, I'm looking at gold just as a symbol of trust and not as something real, because that was what the gold standard meant to me, that it was a symbol of trust that they knew they were going to fucking get rid of at some point.
One thing I can say, this is something a thought that came to my mind when I saw that China was like massively trying to buy up gold, and that would be a run on the U.S. economic system. That if the dollar cost of the gold goes up, then you force the Chinese to pay the cost of like, okay, you're going to try to like catch us. You're way far away, but it's going to cost you more and more and more to try to play this game, because you're not just going to like mine Africa until you do all your gold. You're going to have to buy it up. So part of me wonders if that's also, again, this is speculation, but this would be another way for the United States to make China pay a cost for using this strategy for undermining the US dollar. That's how I look at it.
I don't know. I'm very confused on the US play, right? They're not making it obvious that they have intentions on any sort of gold standard. There is a serious issues, in terms of like its own finances. But again, they're racking up the fucking debt. They're not worried about it. Like, so, and it's not like you can just reset, right? This is where gold comes into place. Again, I can't insist on that enough. That's how I see it. It's a symbol of a solid, base, right? It's a symbol. But like, and again, the stable coin doesn't resolve this. Stable coin does more of what you're saying, the technological aspect of bringing people into the system, digital system. And I do think there's some utility to manage the economy.
I'm going to interrupt you now because I want to come back to this. This is a point I've been kind of sitting on. And I want to go back to the Lynn, what's her name? Zhang? Lynette Zhang. There's one part where she talks about gold. Do you remember this part of her presentation where she talks about gold? She goes, sound money is universal, decentralized, and private. Number one, it's a unit of account. It's a standard of measure of value. Number two, it's a medium of exchange. Number three, it's a fair unit of payment, labor for labor exchange. Why is she talking? Where did that term come from? Like, that was amazing to me that she put that up there. Like, what is she didn't want to, like, she's a capitalist. She says herself she's a capitalist. And then she goes up there and says, gold is a measure of value, labor for labor exchange. Wait, I thought we were talking about value. Now you're bringing up labor. And I'm like, oh, so you're a fucking Marxist. You believe that there's a connection to something's value and the labor, time, or labor put into that thing. And, if that's the case, then what happens to what happens to value as less and less labor gets put, human labor, living labor gets put into it? This gets back to dead labor, because when she's talking about value, she's talking about dead. If she's talking about labor, she's talking about dead labor and living labor. All the labor previously put into the tools that are made into extracting the gold, plus the actual living labor used in extracting the gold. Those combined are used in some way of coming up with a number for the value of gold. But that's what she means when she uses labor for labor exchange. She's talking about the labor theory of value. Maybe not in terms of the way Marx might have conceived of it, because he was working on earlier economists. But early capitalists, Adam Smith, Ricardo, people like that, all talked about value, not in terms of how many goods you made and how much demand there is. They talked about it in terms of the actual labor, human labor that was put into creating that thing. And now we're in a new zone now when we start putting terms like that on there. And now we get to where Fabio Vigi's statement or belief that increasingly the amount of money, the things that we use as symbols of value, like dollars, are increasingly being disconnected from actual value that is connected to living and dead labor, that is something being produced and made, like industrial capacity, like industrial production, that those things are becoming increasingly divergent. And he's saying that that's creating this kind of like hyper crisis that cannot be resolved by capitalism. The thing I would say is, I don't think that's new. I think we've been there before, and it was resolved by World War, but it wasn't resolved by World War. It was reset through World War, and then it could always surface again. It wasn't even solved by World War II, because by 1971, that divergence between the amount of value created by labor and the amount of value they need to make investment continue and keep capitalism moving on, humming, was increasingly diverging. And so I don't know, that was interesting to me when she put that little thing in there. And that I think demystifies this idea about how does gold get its value? Is it because people believe it's valuable? It's like, no, it is physically something, but it's connected to something else that's also physically something, that is humans and what they do. Like, humans are not just mystical beings that we think of like fairies or spirits. They actually exist in the world, and they do things that shape the physical world around them. And that action has value, and it can be constituted constantly in gold. And then when we see that value is put into dollars, what they do with dollars is they basically just lower the value of the dollar to lower the amount of value we get paid back for the value we give up to them every time we do an action in their name when we go to work.
Eduardo, any thoughts, questions, or?
You've said that before, Andy, about wars being able to reinitiate. I think we're missing, though, that I think COVID taught us that it doesn't have to be maybe a war. It could be something as large as a health scare. So, I mean, maybe that's the new way of doing things. If we're going to enter, I don't know if it's, what do you call it, sustainable to enter a war every time we need to reset our economy. Maybe a health scare might just be it. But that's just something I thought.
But I mean, COVID wasn't. I don't see it as a reset. It was like I see it as they were buying time of sorts. And then, like, because there is this, like, I forget. I don't even know if I have it, but we haven't officially had a recession, really. Like,
Well, can I say something in favor of what Eduardo's saying in this terms? And this goes back to Fabio Vigi's article about COVID was about repo markets and about banks lending to banks and that being a problem. There was a financial solution they had to find to this crisis they could not get out of. And that was by a huge infusion of funds into the system. That's the Go Direct, which was really to deal with the crisis happening in the repo markets, which was also mentioned later in your gold one. So, Eduardo, I think you're right in the fact that COVID is a type of correction, just like the housing collapse was a type of correction. I think Marx talked about capitalism as having a cycle of booms and busts by which it operates. And he was, because of the falling rate of profit, because increasingly the amount of capital that's being put into investment is going more and more into machinery, AI, robots, and less into living labor, that capitalism's own actions will make it so that it's harder and harder for it to recover those profits unless it does ever and ever more drastic things. And I would say the 2020 correction was more drastic globally than the 2008 correction, right? And 2008 wasn't a picnic, but 2020 was a global fucking scamdemic. They just made shit up and made people like not leave their houses and said you couldn't go to school. Like they didn't have to do that in 2008. But if what I would look at 2020 as is an indication of the trajectory of the crises, is that the crises are going to get worse and worse. So they're going to have to come up with something better, worse, if you will, than what they did in 2020 for the 2030, if you will, business cycle.
and again, another thing is that to remind, right? Like, again, people think a lot of people on the left defend China, right, as some sort of road to socialism, communism, whatever the fuck. But China has deep also problems in terms of their own debt, and all the debt of the world is like $300 trillion, and it's all connected. And that's what I'm wondering about this economic system. Is like, is that like an attempt to isolate, contagion, right, from future crisis? It's just like a question that I'm wrestling with.
I would say that debt is like a natural product of the divergence between the growing needs for capitalism to expand and the actual value that it produces. And so I just think that debt, it wasn't just an accident that France, Germany, and Italy and the United States, yes, the United States was a debtor nation prior to World War I, that all of them come into that place as debtors. And the problem had become that if they could not go on they couldn't resolve their debt unless they did what the British Empire was doing, which was trying to expand its empire. And so France had to expand its empire, and Germany had to expand its empire, and the United States waited in the wing to expand its empire. They all saw that as a possible solution to the debt problem that they had gotten themselves in. And I think we're in a similar situation today. Like, you can take it out of your working class to some extent, but sometimes you just got to take people's stuff and you've got to force it onto your opponent or your so-called ally. And that's what the United States is doing. The United States is forcing it onto Russia and China, and even Europe, actually, it looks like to me. So, and then that's why U.S. is getting crazy in South America. Like, it has to find a way of becoming an expanding empire that can once again establish what we say goes. And I do believe that that's partly, yes, there's resources to be claimed in Venezuela, but it's also, I think, reestablishing the belief that the U.S. is the one that directs world events, which underwrites the trust, I believe, that people have in that dollar.
Yeah, so the whole Argentina thing too, right? Like they're being brought into a system of debt. This is like an IMF loan. It's a loan. It's not free money, right? Like,
Yeah, and I also do believe there's an imperial part. What U.S. is doing as an empire feels like it's related to striking at BRICS at its weakest link, which is Brazil. And so I just believe, like, I do think the U.S. is in a bad situation, but its allies, well, its opponents, don't have as much gold and don't have as much global reach as they do. So, but again, Britain was in that same situation prior to World War One, and as it was a debtor nation trying to get itself out of that through colonial expansion, and had gotten into debt because of colonial expansion, and then trying to resolve it through more colonial expansion. And I think it didn't work for Britain. I don't think it would work for the United States. It definitely is not going to work for us. Like, it will come at the cost of all of us. That's the thing that people have to realize.
and I think that would be my kind of like last point about this, right? Like, I started this conversation with, you know, on one end, right? Like, yeah, it might help in the short term, like to fucking shore up your money, but that's like really not that's a solution for like the global 1%. Like, that's not. Some people are gonna survive whatever the fuck, but everyone else is caught in this game. Like, and again, it reminds me, right, of there is no other solution for us, the people who are caught in that game, right, than to uh, take power from the people who are driving this system of destruction and pillage and all that stuff. Because I think that was my point. Like, that's the as much as I'm confused about many things still, like even the value theory of labor, we have to dedicate, I think, an episode right to that. I know that much, that we're just caught in a game that, and even the people who, right, like, think that gold is just a safe bet, they can still fucking corral you. Like, there is also a precedent here where gold was confiscated in the
Yeah.
U.S. in 1933, and it wasn't. To my surprise, it wasn't. They threatened people, but the majority of people complied. And it was like similar things apparently to like the COVID time, where, like, as a duty to, like, to the nation and to society, and using all this moral shit, and at the same time using a stick, if you have to imprison you for 10 years or $10,000, some shit like that. And so again, there is no. That's my point. Like, there is no uh, exit strategy. Like, some people, it's like the Titanic too. Like, some rafts are gonna hold people, but the majority of people are gonna be fucked. And yeah.
I think you're right, Kenny, about the financial advice that most people get are usually for the 1%, for how you can take care of yourself in the future. I was curious, when, what's her name from Zhang Enterprise, Lynette, she was saying that the best thing to do was to take care of your water, to take care of your land, to take care of your even typic of gold, but to your food reserves, whatever.
Community.
Your community.
She's like a communist.
She is. She, and that, honestly, that's also like, in general, what sometimes I get annoyed by listening to a lot of libertarians, because they make a lot of the same arguments we're making. It's just that they believe that the institutions and the system, that's how I understand it, that, if you had less corruption, like, it would work. No, but there is a logic in capitalism that, just keeps us driving to the cliff and fucking war, and that's why I'm not a libertarian.
Yeah, and maybe I won't even call her a communist, but that's a revolutionary viewpoint. I'll say that. You can't retain capitalism and do what she's talking about. So I'll move back from saying she's a communist, but that's a revolutionary viewpoint, and she's, she just doesn't see it.
And there's someone that studied permaculture. It's all these systems that you are like having to look at so that you take care of yourself, your community, your food source, your water source, everything. And I shared the episode where you both were talking about BG, Whitney Webb, Jimmy Dore in the What's Left episode. And it's funny how we're circling back to that conversation. And Whitney Webb, when Jimmy Dore asked her, so what do we do? Whitney Webb said, she has land in Chile. And she's taking care of herself that way. Besides doing all these other things in order to take care of herself. And then you mentioned in that very same episode, Andy, how that is a survival strategy, but that's not necessarily that's the strategy as a community.
Yeah, that's not going to get it done for the vast majority of us. And it really doesn't get it even probably done for the individual at the end of the day. That basically lets the system rip. And I feel like if the system isn't stopped, it's going to lead to a calamity.
I invite folks, if you can link to that episode, people can re-listen to that episode that you and Kenny had, by the way.
So Eduardo, how do you feel about this? Was this a good first stab at this discussion?
This was a very good stab.
Yeah,
I think.
And again, I'm glad that we're discussing together, because again, this is one of my things that I watch, to get too caught up in the technical shit, because I do think there's some relevance, but I've been caught up in that. But by the questions that you were asking, and the context that Lipson is giving, or the Marxist view really of this, it's I feel less crazy.
Yeah. I wanted to say one thing I uncovered. This is just a detail, but Bank of America is now saying that it's recommending banks hold 30% gold reserves thing versus 20%, which is a pretty significant shift. Again, do I know everything that means? No, I just know that that's a big deal.
Yeah, I mean, I do think that there is something big coming, and this is just, call it superstition or whatever the fuck, but it seems like March, or that first quarter, is always something. 2008, the 2008 financial crisis started around that fucking period. March was also the pandemic, right? In just two major fucking things like that in our recent history. That so I don't know. Maybe next year will be fun.
I'm definitely I do feel within this decade there's going to be some big events, and with the U.S. even predicting that there'll be a war in China by 2027 or something like that. But we'll see.
All right, let's conclude. Well, thank you, Kenny, for that dense and very informative, and also lots of incomplete questions we have to answer and get to topic. So that does it for this week's episode. Let's conclude. What's Left is a weekly political podcast / channel challenging the mainstream left. We post information about our topics and our guests in the episode notes wherever you found this episode, or on our blog at whatsleftpodcast.com. You can find past episodes to this podcast / channel there and connect with us. I remind folks, if you like anything you've heard here, please subscribe, rate, review, turn on your notifications to any of our platforms on Spotify, iTunes, Podcast, BitChute, Odyssey, YouTube, Rumble, or Telegram. And you can find our blog and any of those links in the episode notes wherever you found this episode. If you would like to give us feedback about something you've heard or suggest something for us to cover, contact us through our blog. I'm Eduardo Barca with co-hosts Kenny Zepeta and Andy Lipton. Thank you all very much for listening. We'll check us out next time, and we'll have another topic like this. I'm trying to figure things out. Thank you. Ciao.
Bye-bye.